Today on Growing Idaho, are corporations buying up all the homes and driving up the prices? Let's start with a comment we got on last week's Growing Idaho about young people being priced out of the market. Anthony said, quote, "Best way to reduce housing costs is to ban corporate ownership of residential housing," end quote. Other people like Michael and Tyler had similar things to say, and tons of people agreed. Now, if you don't know what they're talking about, there was a growing trend a few years ago. Corporate investors would buy a bunch of houses, convert them into rentals or flip them, and then sell them for more than locals could afford. That would contribute to the housing crisis in a big way. How true is it? Well, it depends on when we're looking at the numbers. According to the Pew Trust and also CoreLogic, this really kicked into high gear post-pandemic. Back in 2021, 24% of all American home purchases were done by investors. Now, investor doesn't necessarily mean corporation. Could just be a local person flipping a home or buying a property they're going to rent out. In fact, only 3% of American homes were bought by corporations. It doesn't sound like a lot, but it's not nothing. Blackstone, the investment company mentioned by a lot of you in your Facebook comments, had more than a third of its capital in real estate. That's hundreds of billions of dollars. Also, a lot of this was happening in Idaho. 26% of Idaho homes were sold by investors, not necessarily corporations, but investors. That was the seventh highest rate in the entire nation. Now, if this trend continued, we'd be in real trouble. We're still in trouble, just not as much because these trends are not continuing at this rate. They're continuing at this rate. Redfin just came out with an analysis through last year. Shows that investors, corporate or otherwise, are still buying homes. But it also shows that those numbers from 2021 were really an anomaly. As of the start of this year, investors were buying 17% of the U.S. homes that sold. That's down 2% from the year before and almost exactly where we were pre-pandemic. Analysts say all this is due to home buying demand slowing down, a lackluster rental market, economic uncertainty, and elevated interest rates. So investors are buying fewer homes overall. But they're still buying plenty of low-priced homes. I know what you're thinking. Hey, those are exactly the homes we need lower wage earners and first-time home buyers buying, not investors. Yet, year over year, while investors are buying more than 3% fewer high-priced homes, more than 11% fewer mid-priced homes, they're only buying about 0.1% fewer low-priced homes. Essentially, there's no change there. Investors still buying more than 24% of the low-priced homes out there, so about 1 in 4. Again, the majority of those are not corporations, but they are people buying homes, not for a place that they can live, but a place they can make money. So to answer the original question, corporations are not buying up all the homes and driving up the prices, but they are buying some of them. General investors are buying more of those homes, especially the low-priced ones.